Good evening, everyone, and welcome to the Brian Crombie Radio Hour on Saga 960. It's a real honor of mine to introduce you tonight to Colin Lynch, a very impressive gentleman. He is the managing director and head of global real estate investments at TD Asset Management. And in that regard, he invests in commercial industrial properties across Canada. And we're going to talk a little bit about the real estate business. But probably more importantly to us and to him is in December, he received a major honor, a major award, and it's for his involvement in the community and Black Opportunities Funds and things like that. And we want to talk about that. Why would someone want to be so involved in the community and why he received that honor? So please welcome Colin Lynch. Colin, how are you tonight?
I'm very good, Brian. How are you? And thanks
Excellent.
For having me.
Thank you. My pleasure. So, sir, what was the award that you received in December?
Yes, it was the Afro Global Excellence Awards. Afro Global is a TV station. They also produce content on a number of other networks. And the award particularly was for professional achievement. And I guess it was in recognition of the work that I've done, both in my work life, but also in terms of community service as well. And they awarded that to me back in December.
Congratulations, sir. Tell us a little bit about what exactly you did that made you deserving of this award.
Well, they told me a couple of things. One is I certainly have been fortunate in terms of my career. I've moved to a number of places, worked around a number of industries around the world, and got into the real estate world, and now have leadership on a very significant program. It's about $23 billion in size that invests in property all over the world. And so I think they viewed that as quite significant, given the size and scale of investment that we make in Canada and outside of Canada as well. And I've certainly had a big commitment to the community, and certainly have over the years been involved on the university board. I was on the Toronto Community Housing Corp board as the vice chair of that. I was now on a major hospital board, Sunnybrook Health Sciences Centre, on the Toronto Symphony, Toronto Investment Board, 111, which is a tech incubator here in Toronto. So all of those things are passion projects per se. And I think they looked at all of that plus my work and said, you probably need some help. So here's an award to help you out.
You know, reading your resume is one of the most discouraging things I've ever read. Like, you are amazing, the things that you've done. I got to just tell everyone a little bit this. To start with, you graduated with an MBA from Harvard Business School. Congratulations in that regard. Before that, you did a BCom at Queen's University and a BA in history at Queen's University. And I love to read that you graduated from the Royal Conservatory of Music and Piano. Congratulations on that. That's kind of an interesting thing. And as you mentioned, you were a member of the board of directors of Sunnybrook. You were co-founder, committee chair, board of directors of the Black Opportunity Fund. You were a member of the board of directors of the Toronto Symphony Orchestra, advisory committee 11, committee member of 111, which operates a 55,000 square foot facility in the heart of downtown Toronto, providing state-of-the-art facilities, meeting rooms, podcast studios, etc. Member of the board of trustees of Queen University, member of the board of directors of the Empire Club, executive officer of the Harvard Business School Club of Toronto, University Council, Queen's University, and a vice chair of the board of directors of Youth Empowering Parents. You've done a lot of community work, like, my gosh. And then from a business standpoint, everybody listen to this. He starts out as a consultant with Monitor. Then he becomes an analyst in investment banking with Morgan Stanley, and then a summer associate at McKinsey and Company, then an engagement manager at McKinsey Company, then a general manager global strategy for Amira Inc. in Toronto, and then a senior vice president global real estate investments for Greystone Management Investment, then a vice chair board of directors and chair of the Toronto Community Housing, member of the Toronto Investment Board of the City of Toronto, and now managing director, and head of global real estate investments for TD Asset Management. What an impressive background, sir.
Well, thank you. I've had a lot of probably help along the way, whether that's mentors and a lot of employers that have been accommodating, I guess, of all my extracurricular activities in terms of community. But certainly it has been a lot of work and a lot of passion for all of that. But
Why
thank you.
be involved when you've got such a successful business career, and you obviously are probably a pretty demanding career? Why be involved in so many community things? Why do you do it?
Well, you have one life at the end of the day. And one of the things that both Queens and Harvard did well when I went to both programs in their business schools was really emphasize that you have one life and one opportunity to make the impact that you want to have in all aspects of your life. So that's career, that's family, but that's also community. And what they said, and there's a course at Harvard called Authentic Leadership Development. And we read sort of case studies of different people that had different impact. And what they encouraged you was to think about all those aspects of your life as you go through your life versus at the end of your life. And to, I think they were trying to get me to avoid the feeling of, you hit the end of your life, and you say, look, I wish I actually did more to give back, to help out, et cetera. I think most people do that at the end of their career. And I just thought, the community, helping people means a lot to me. At the end of the day, at the end of my life, what's going to actually matter is the people that I've impacted. And we had a retreat when I was at McKinsey. It was in North Carolina. And you spent a week and you sort of thought about all this stuff. What do you actually care about? And to me, it's not the dollars in the bank account. And don't get me wrong, I like dollars in the bank account a lot. But at the end of my life, what will matter is what impact have I had on society? And studying historical leaders, studying historical societies, it gives you a good perspective on what mattered in those societies and what impact did those societies have today, and what impact will do those historical societies have in the future. And to me, what mattered most to me was the ability to impact people today, to create opportunities for people today, and in that respect, have a great impact for future generations.
What an inspiring belief and model to live by. We're chatting with Colin Lynch. He's the managing director and head of global real estate investments at TD Asset Management. He won a big award just a couple of weeks ago for his involvement in the community. He's got a resume that, from both a business standpoint, an education standpoint, and a community involvement standpoint, is stellar. We could learn a lot from this gentleman. We're going to take a break and come back more, and we're going to ask him a little bit more about the Black Opportunities Fund, about his involvement in the community. And then later on, we're going to ask him a little bit about real estate, because a lot of people are wondering about that business and that industry sector. We're going to take a break right now. Stay with us, everybody. Welcome back to the Brian Crombie Radio Hour on Saga 960. It's a real pleasure and an honor for me to meet and introduce you all to Colin Lynch. He is the managing director and head of global real estate investments at TD Asset Management. I've been following him on social media. I'm not sure if you realize that, Colin, we went to the same school, and so that's why I followed you. And I was very impressed with your background, and that you received this big honor for your community involvement back in December. And that's why I reached out to you. And because, we're starting a new year. And I think that when we start New Year's, probably we should do it all the time, but when we start New Year's, it's helpful for us to meet people like you that have the attitude that you've got in regards to making an impact on society. So I thought it would be really interesting to feature you as we start this new year, and hopefully get some inspiration from you in regards to our impact. So thank you for joining us. Let me ask you,
for having me.
In the last year, obviously for a long time, but particularly in the last year, because of some of the race protests, some people called riots, in regards to Black Lives Matter and the murder of George Floyd, et cetera. I've had a lot of people on my show that we've interviewed about systemic racism, about how people can get ahead. And it's interesting. You've done incredibly well. What do you think the secrets were to your upbringing, upbringing or your education or your success in business? What lessons have you learned about why you've been successful that we could pass on to other people, particularly given that you're Black and we're living in this era where, you know, people say, and I certainly believe, that there is systematic racism in our society. Tell me a little bit, if you could.
Yeah, it's a good question. There's a few thoughts that come to mind in terms of what was important in my upbringing. First, I had very hardworking parents, very hardworking parents. So, you know, and I'm sure a lot of us had hardworking parents, and they really emphasized the importance of working extremely hard, working harder than anybody else, and just knowing your stuff. So that meant excelling at school, and that meant being able to, you know, participate in the sports, to occupy your time, to get into music. All of that was critical for my parents providing that foundation. And I think, you know, when you look at a child's development, those early years, you know, age 3, 4, 5, 6, 7 really matter. And I think my parents, even though, you know, my dad would leave, go to work, he worked in construction, he'd go to work at 4 a.m., 5 a.m., as they do in construction, and he'd always be gone, and sometimes he'd be working weekends, etc. So I don't know how they did it, but they managed to juggle it such that I was always occupied, you know, with things that were constructive, playing the sports on the weekends and doing the piano and other things. And I think that was important. Second was positive reinforcement. I had an aunt, and I have a cousin. So the mom of my aunt, sorry, the mom of my cousin, she also went to Harvard Business School. And so my cousin went to Harvard Business School, and her mom, my aunt, would always tell her, "You're the best. You're the best." Now, are you the best? Probably not. But as a kid, that's really valuable to hear. That positive reinforcement that you can do something, that you can, you know, be the best on that test or whatever it is. And I think actually that really matters. And I remember that because whenever she'd be on the phone, she'd be telling me, "You're the best, and you can do it." And I think that was really important. I also have to say, you know, I did grow up in an area which was, you know, very diverse, but there are actually very few Black people, with all sorts of people from different areas of the world. So whether it was Sri Lanka or whether it was Vietnam, a lot of Vietnam War refugees were in my area. But then I went to high school, again, very few Black people, but very diverse. Went to Queens, very few Black people. Went to Morgan Stanley, very few Black people, et cetera, et cetera. Why do I say all of that? I probably would say I was a little bit naive in all of those environments because there were probably a number of instances of racism, but it really didn't hit me. And I call it naivety because I kind of look back at the time, and I'll use a couple examples like Frosh Week at Queens, where, you know, in the lens today, looking back at it, you know, there was a multitude of issues on Frosh Week at Queens. But going through it, it sort of, and I talked with other friends, albeit they weren't Black, they were of different backgrounds. And we also looked back at that and said, yeah, no, that definitely was not the right environment. But going through it, you sort of, things kind of bounced off of you. And so I call that naivety a little bit, going through all of those different environments. And if I had the background of, you know, hard work, I'm going to work really hard. If I had the sort of intuition that I might not be the best, but I can certainly figure it out, and I've had a lot of that positive reinforcement, those 2 points really helped me navigate all these environments. And I had the naivety just to say, look, I can. I've studied, you know, the Warsaw Ghetto, and I learned about individuals that lived through that experience, 5 years or 6 years of literally hell on earth. And if they can do it, then me, who, yeah, I'm going to have to study all night. I mean, there's far worse things in life than having to study all night, right? So everything was, in relative terms, and studying a lot of history helped me sort of put my perspective and whatever my complaints were in a broader sort of context and say, look, I might have some issues, but nowhere close to what people have navigated through.
When and why did you study the Warsaw Ghetto?
Yeah, so that was part of my history degree. So I had studied the European Revolutionary period. So basically French Revolution, so 1789-ish, all the way through to the end of World War II. And a lot of historians will view that period of Europe as generally one big revolutionary period. And you have lots of wars, the Napoleonic Wars, there's an 1848 war, there's a number of revolutions, empires came and went. And you had the Spanish Civil War in there and 2 world wars. So it's a fascinating period just to study. And I also studied the British Empire because that was connected to that revolutionary period in Europe. And so that was sort of the area, and you had all these interesting courses that I got the opportunity to study. But all those courses gave a lot of context again to, even today we're living through a pandemic. It's bad, but I have to say, compared to the Spanish Civil War, we're probably doing okay, right? So it really helps to put a lot of things in context, and that was helpful to me.
So I've interviewed a bunch of people that have talked about streaming in our educational system in Toronto, in Ontario, that is prejudiced to people of African descent, that streams them into general occupations, general studies, that doesn't encourage them to go into advanced studies, doesn't encourage them to aspire for higher education. In fact, the children of a vice principal that are Black that were told that they couldn't achieve anything, and ended up disagreeing with that and proving the guidance counselors wrong. Your parents obviously were critically important to you. What do you think we need to do?
Yeah, I think I think it's a multi-pronged solution, and I hesitate when I say the word solution because I don't want to sort of indicate that you do A and B and therefore you solve all these issues. But I think that there's a few things. One is, if I go back to my parents, they certainly weren't parents that sort of stood by and let the system work. They took an active role, right? So that was making sure I did the homework and making sure I understood everything. And for sure, they interacted with my parents. With my teachers. They went to all the parent teachers nights. And I think they provided a presence to teachers that said, don't mess with us, effectively. And if I think about my elementary school and all of my elementary school teachers, they certainly got the message, and it certainly wasn't for me. So it certainly must have come from my parents, that this person was going to do well in their academics. And so I think there's an active role for parents to play. And there's a number of issues that sort of intertwine with that. Number one, not all parents are able to play that active role because you might not have both parents. You might not have parents that are able to take off the time from work to be able to go to the school, to attend those parent teacher nights, et cetera, right? So there's a whole world around that, which impacts the end result, which is 2 parents that are able to take a very active role in their child's development, and also to take an active role in interfacing with the system. There are far too many stories, and this is the second point that I've heard through just experiences on town halls with the Black Opportunity Fund, for me to conclude anything but that there has been systemic discrimination in the education system as it relates to streaming. And I think that's quite obvious to me just through the town halls that we've heard. to be, personally, that didn't happen to me. But that's, I think, because my parents played, again, a very active role in the grade 7, grade 8, grade 9, and grade 10 years.
Did you grow up in Toronto?
I did, in Scarborough.
So, some people have argued for Afrocentric education or Black only education, that's the solution. Yet you went to a school where you said there weren't many Black people and you were in a very diverse community. Which is better, do you think?
Yeah, that's that's a real hard question. I'll answer it this way. I have zero regrets on the educational path I pursued. I really, really enjoyed my high school experience at Sir John A. Macdonald. I enjoyed my elementary school experience at Silver Springs. I enjoyed the Queen's experience, albeit it was tough in the first year for a host of different reasons. And so I would repeat that again. I would do it all over again without an ounce of regret. That being said, that path worked for me, right? It worked for me because of probably my parents and the role that they played. It worked for me because of how I'm sort of, oriented or whatever. It may not work for everybody. And so I caution on saying, just because I would do my path all over again doesn't necessarily mean that somebody else growing up, for instance, in Jane and Finch, in an environment where there's a lot of challenge, and I go to my TCHC world and some of the things I saw there, and they could grow up in a very sort of difficult environment, in an environment that might tell them they have zero opportunity. Could it be helpful for them to learn a bit about their history, a bit about how they can sort of view opportunity different? Perhaps. So I'm not, Brian, I know I'm not going to answer your question here, because I do think it's really different depending on the individual that you talk to, and their individual circumstances. But for me, I would do exactly my path again, which wouldn't involve going to an Afrocentric school. But that's because that path worked well for me and I have no regrets on it.
Well, it sounds like your parents played a very critical role in ensuring that you weren't held back in any way, shape, or form. Tell me about the Black Opportunities Fund. What is the fund? What does it do? What's your involvement been? How have you felt about your impact?
Yeah. So the fund is a permanent source of pool. It's designed to be a permanent pool of capital for the Black community, unprecedented in size and scale. $1.5 billion is the goal over 10 years. And it is designed to do largely two things. First is to support Black charities and nonprofits by providing grants, multi-year grants. And the second is to support Black businesses and entrepreneurs by either providing below market rate loans or providing equity investment. Why? Largely because what we have seen is a paucity or a lack of funding available to Black charities, nonprofits, and Black entrepreneurs and Black businesses, period. There's a number of different reasons why. On the charity nonprofit side, vast majority of Black organizations are nonprofits. They are not charitable organizations. It is very lengthy and relatively difficult to become a registered charity. We've gone through it as the Black Opportunity Fund, and we've just become a registered charity, but it is very, very difficult. It is hard as a nonprofit organization to attract a lot of funding unless you have that charitable status. And in order to get that charitable status, you need help to figure out how to do that, which means resources, which means some people. And so that's where you have a bit of a gap. You have a lot of nonprofit organizations that just aren't the size to be able to scale up. And what the Black Opportunity Fund is trying to help do is to help scale up their impact. Why? Because as a Black Opportunity Fund, what we didn't want to do was replicate or just reinvent or just duplicate already existing enterprises, existing organizations in the community. What we wanted to do was to recognize that there are thousands of people and thousands of organizations doing amazing things. Let's just scale up their impact. Let's just help them do more. And what did we figure out that they were missing? A lot of financial support. Businesses and entrepreneurs, same thing. You know, the venture capital funding to Black businesses is incredibly small, like very, very small, like less than 1% of funding small. And there's an issue, and there's a number of issues that explain why that happens. But at the end of the day, there's not a lot of funding. And so ultimately, if we solve that funding gap by allowing entrepreneurs to scale, to create new businesses, and we show, you know, traditional sources of financing, so whether it's banks or whether it's venture capital firms, that these are viable individuals and viable businesses to invest in, then we create benefit for the community and for Canada. And so ultimately, that's what it does. Principles are, it's national, it's across the country. We recognize the importance of gender, which is often overlooked. So Black males get a lot more of the funding generally than Black females, although Black females tend to be incredibly entrepreneurial and innovative, both in business and in charities. So we recognize that. And we also recognize the LGBTQ community, same thing, as it relates to gender. And it has to be well-governed, and it has to be around for a long period of time, because ultimately what we're trying to do is, again, build that permanent, accessible pool of capital. Think of it like an endowment that sort of grows over time, and the returns of that endowment get used to support either Black charities or Black businesses. This is all a philanthropic endeavor, right? So this isn't the Black Opportunity Fund with a bunch of people that have invested in it that's going to get rich, right? That's not the point. This is a opportunity fund where the returns get reinvested in the community. Nobody's getting rich off of this. I'm not taking a cent. It is purely a philanthropic endeavor to help create good change in our country.
Colin Lynch, thank you for that contribution that you're providing to Canada and to Black Canadians. I really appreciate it. We're going to take a break for some messages and come back more with Colin Lynch, the Managing Director and Head of Global Real Estate Investments at TD Asset Management, recipient of numerous different awards, and an inspirational gentleman. In just a minute. Stay with us, everybody. Welcome back to the Brian Crombie Radio Hour on Saga 960. We're chatting tonight with Colin Lynch. Colin is the Managing Director and Head of Global Real Estate Investments at TD Asset Management. He's a graduate of Harvard Business School, Queen's University. He is a recipient in 2020 of one of Canada's top 40 under 40, an annual recognition of exceptional achievements for 40 outstanding Canadians under the age of 40. He's also a recipient of the Queen's University Toronto Branch Award to Toronto area alumni, and in December he was given an Excellence Award by a local Black organization, radio and TV station. And congratulations for that. And then I was at a first conference that I've been to, first live conference in about a year and a half, the Toronto Real Estate Conference, and you were a panelist. Tell me, what did you speak about?
Well, we spoke about the pandemic, and we spoke about the future of real estate, the outlook for 2022, and a very challenging question, which is, what does the next 10 years look like? Challenging because the last 10 years have been so interesting and so different, so challenging to figure out what the next 10 years will look like.
So tell me a little bit about what you think. And I understand that you may not be overly involved in residential real estate. Primarily commercial real estate is your focus. But lots of people think that the residential real estate market is at a high. Some people have called it a bubble, and wondering whether the bubble is going to burst. In the commercial real estate business, cap rates are at unbelievably low rates. I think you focus in retail and shopping centers, and shopping center cap rates are, like unbelievably low. Industrial has done incredibly well during the last little while. Office, not necessarily so, though at that conference, lots of people said that office might be a surprising opportunity. What do you think the outlook is for real estate in different sectors in 2022 and beyond?
Yeah, well, so and I'll focus on Canada, though we do invest outside Canada. We also have about 18,000 apartment units. And I differentiate between apartments and condominiums and single detached houses, because they all sort of act a little bit differently. But why don't I start with the apartments? So we have 18,000, we have 2,000 apartment units under construction, and we have 4,000 condominium units under construction as well. And why do I start with that? Well, I'd largely say fundamentals in Canada continue to remain relatively strong. So you have a lot of immigration, and you have a lot of, which means population growth. You have limited supply, and candidly, I think municipalities could do a lot better on providing supply. When you have limited supply and you have a lot of demand, fundamentals of economics says you have rising prices. In addition to that, we've had extremely low interest rates, and so that has produced even more fuel to the rising price fire. If I were to say, out of those three dynamics, so limited supply, that will continue. High demand, that will continue. The only area where I'm a little bit concerned about is interest rates. And in particular, and this is going to come to more of the single detached side, townhomes and condos. And so this is less with my sort of official hat on and more me providing some thoughts, is there's a lot of people with variable rate mortgages. And clearly, as interest rates rise over time, those variable rate mortgages will rise. And so if there's an area of caution, I would say that's the area where I would say I'd be a little bit cautious about. Is that going to produce a burst in the housing bubble? I don't think so, personally. And if I come back to the institutional land, which is where I play in terms of apartment buildings, we're very positive. And that's because of the strength of those two other factors. Limited supply, and this is across the country. So this is Vancouver, limited supply, even in Montreal, limited supply, in Halifax, limited supply, and a lot of demand. So that's apartments. In office, that is a lot more hazy. I believe very strongly that well-located offices. So what do I mean by well-located? I mean offices that are close to a transit line, offices that are have a lot of amenities. So i.e. there's a gym in there's a place where you can sort of, you have EV charging stations now, you have, great social atmosphere on the ground floor, et cetera. But in particular, those offices that are well connected to transit will perform pretty well. I think where we get a lot more cautious is on older offices, so 30, 40, 50-year-old offices that are what we consider Class B, Class C offices. If you look at the vacancy of those offices, it's pretty high. You see 20, 30%, 35%, sometimes 40%, sometimes 50% vacancy. And that's not different than any other recession. Vacancy spikes, and people generally move from those offices into better located, higher quality offices. Why? Because you can get those offices at a deal. And so we see that even today. Now we have the nuance of a pandemic. And as I said at that conference, I still profoundly do believe we're in the middle of a healthcare emergency. And so, taking a strong view in the middle of an emergency on how people are going to live their life as the emergency passes, meaning it becomes endemic or whatever, I think it's a very challenging, bold statement to make, meaning I do think we are acting in a way that's specific to this emergency. And as it passes, we will act in a different way. Now, does that mean we're going to go back to 2019? Probably not, but I really doubt that we're going to be doing as much, Zooming and Google Meets and all that stuff. I do think we're going to relish some of that in-person interaction. And talk to anybody that talks about travel, and you'll probably hear them say, I can't wait to be able to get out and travel to wherever they wanted to travel, and that's been delayed. I do think that there's going to be a lot of socializing coming out. So how's that going to impact the office? A little bit TBD, but will we use less offices going forward? Absolutely. But we'll call it in Toronto, will the TD Center be empty? No. Guaranteed there will be folks in the TD Center. It'll be well occupied, and they will be meeting. They will be doing all the things that we were doing prior to the onset of COVID. Retail is interesting. So retail, for years, we've been seeing the e-commerce sort of freight train come along, and that has been challenging for the retail sector, more so in other parts of the world, but certainly that began really hitting just before COVID had hit in Canada. Similar thoughts to the office dynamic. If you have a fortress shopping mall, so that's Square One, that's Eaton Center, that's Yorkdale, those are destination magnets. And even, Boxing Day, you had people lined up outside and around and et cetera. Yes, some were getting COVID tests, but most of the people were trying to get in and shop. And so that those centers are magnets. And then if you add on top of that the ability to densify some of those centers by putting apartment buildings in the parking lots, those will perform extremely well. There are other centers that are sort of smaller and more regional that will be a lot more challenged. But again, if you think about it, those centers are generally well connected to transit and very much and very large, and a lot of parking, and traditionally excess parking. Rarely are all those parking stalls used. And so that presents the opportunity again there to densify with apartment buildings. And then lastly, industrial. We just don't have enough space for all these packages. And that was a pre-pandemic thing. We have so little space, so little vacancy. Prices are spiking, land prices are spiking, and candidly, not many municipalities like building industrial like warehouses, right? Like it's not that popular for many municipalities, which means limited supply. So you have tons of demand, limited supply, and you have more and more of these Amazon boxes going through the system, and Amazon needs more space. DHL, FedEx, they all need more space. Wayfair, and where are you going to find this space? It's very, very hard to construct. So we're very positive on the warehouse space going forward, even though we are going to get out of our homes, and we are going to socialize, and we are going to go shop a bit more in person. Even so, we will still continue to see e-commerce grow.
Now, you don't work for TD Bank, you work for TD Asset Management. So are you investing in debt or in equity?
Equity.
And so people would invest in your facilities, in your securities by way of what? Putting their money with a wealth management person at TD Asset Management, and that invests in one of your funds?
Yeah, it's a good question. So most of my investors in terms of quantum of capital are institutional. So those are pensions, endowments, et cetera. Though we are having a growing number of investors that are individuals, and they invest through TD's channels. And there's a couple. One is called Private Investment Advice. One is called Private Investment Counsel. So those are the people where you go to the branch and they sort of help you, figure out how you should sort of organize your financial affairs and et cetera. And right now, those are largely sort of high net worth channels, regulatory wise. Although we have some other channels also through TD, through what's called mutual funds, the mutual fund channel, where you're able to sort of have exposure to the funds that I manage. When the funds I manage are the what's called the TD Greystone Real Estate Fund, and all of those are accessible through TD channels.
You said you invested in condos. So are you doing pre-construction condos?
Yeah, so we develop condos. So as an example, we have in Toronto, there's on Queens Quay, on the east side of Queens Quay, there's a development called Sugar Wharf, and we are the majority owners of that development. Menkes is the developer, and they have minority ownership, and so we develop those condos, and ultimately, as you know, the way condos work, the individuals purchase those condo units from you. So we've got 4,000 of those units under construction across the country, including, for instance, in Sugar Wharf. And on completion, those units will be owned by individuals. But for us, we are an investor in the project, and in some of our projects, we have condos, others we have apartments, and sometimes we have both. And where we have apartments, we own those for the long term. And where we have condos, we've built them, and we ultimately hand over the keys when the project's completed.
I've read some reports recently of different institutions, funds investing a lot in housing to rent, and it's a new trend, and it's not just apartments, but it's single family homes. And I guess it's based on a lack of housing availability, affordability being challenged, but yet a big opportunity to buy and get long-term income from renting that housing stock to individuals. What do you think of that trend?
Yeah, it's been around for a while in the U.S. It's pretty large in the U.S. For the record, we aren't invested in that trend, single family rental trend. I think you've hit the nail on the head as to why it exists. There is an affordability challenge, and housing has become more and more expensive, and the ability of individuals to afford the down payments has become very stretched. And so you have a lot of individuals that were living in apartments that have moved out of apartments, particularly older millennials, and they want to live in a house, but they can't afford it in terms of paying the down payments. So this is providing them the ability to sort of rent house. Also in the US, it's a little different than Canada. You have a lot more mobility between cities. I think in Canada, we tend to be a lot more stationary, i.e. you grow up in Montreal, you work, you have your first job in Montreal. It's pretty rare to move to Vancouver and then move to Calgary and move to Halifax. Whereas in the US, you have a lot of people that sort of move, and there's been a great migration actually happening out of places like New York and even San Francisco to places like Atlanta and Dallas, and that's been going on for 15 years. So it's been a little bit different. I know it's beginning to come here to Canada, and I know there's some developers that are sort of looking at entering the space, and ultimately what that will produce is, you'll see a lot more demand for housing, i.e. because you're just introducing a new person that's going to be buying up a lot of houses. It will produce an ability for individuals to live in a house that otherwise wouldn't have been able to live in. But ultimately, when you add more participants buying housing, you're going to raise the prices more because you increase demand. So how do you negotiate that? Well, you increase supply. Well, the problem is, we have limited supply in Canada because it takes a long time to do anything in terms of, bringing new, supply to the market.
So, housing affordability was one of the major issues in the last federal election. And you hear stories about it constantly in the media. I think that the statistics are that our, housing prices to incomes or, housing prices to rents are at like an all-time high and comparable to where the United States was in 2007 prior to their crash. So why don't you think we're in a bubble that will burst?
Well, so I go back to those 3 points. A lot of demand spurred by immigration, very limited supply, and that's just the difficulty to get anything built. And so the fundamentals of those two dynamics in economics just produces rising pricing. There is a point at which affordability will stretch people's budgets. We haven't reached that point because interest rates are very low. right? So the carrying costs of rapidly rising properties has been manageable because interest rates are very low.
And as you said, a lot of people are choosing to go variable.
Exactly. And so the cost, if you look back to 2019, if you're on a variable rate mortgage, the cost has actually gone down, even though your house price has gone up, right? So that's the dynamic that we're living in today. But I go back to the third point where I said, we are entering a rising rate environment, and there's a number of folks on variable rate mortgages. Now, is that going to produce a housing crash? I think the U.S. had particular dynamics as it related to global financial crisis in terms of the packaging up of debt and moving it through a variety of institutions, and the declaring of debt that was lower quality, higher quality, and all that stuff. So there's a bit of noise, but I think there is reason to be concerned on how will rising rates impact some of the more overstretched borrowers in the Canadian marketplace. And I know we have things like the stress tests where you're supposed to stress test at a higher rate than you actually are paying. And I think that will help. But I do think that there is cause for concern. Is that cause for concern going to cause a spectacular collapse of the housing market? I don't think so. And again, back to the fundamentals. A lot of people looking for housing, very limited supply. But I would be extremely surprised if we see a rise similar to the last couple of years in 2022. I don't see that happening. But I also would be extremely surprised if we have a huge crash.
And while you're not in this business, would you be recommending, giving your comments, that people fix long-term rates, don't go variable?
Well, let me answer this, and I'll answer that in the context of what I'm doing, which is, I personally invest in real estate, and I look at where interest rates are today. I look at where they've historically been, and I look at the prognosis for the future. And personally, I am looking at fixed rate mortgages.
We're chatting today with Colin Lynch. What an inspirational, dynamic young guy. We're going to take a break for some messages and come back with some concluding comments in just a minute. Stay with us. Welcome back to the Brian Crombie Radio Hour on Saga 960. You know what? Colin Lynch is my guest tonight. And Colin, I got to tell you, you're one of the most inspirational guys I've had the privilege of interviewing. I've interviewed over 500 people in the last little while on my show. And you are an amazing gentleman. I hope I get to meet you in person at some point in time when the world opens up again. Colin is the managing director and head of global real estate investments at TD Asset Management. He's got 2 degrees from Queen's University. He's got an MBA from Harvard Business School. He's graduated from the Royal Conservatory of Music and Piano, and the piano is sitting behind him in our view right now, which is pretty impressive. He won a big award from an excellence award from a local Black TV radio station in November. December, he was named one of Canada's top 40 under 40. It just goes on. Your list of occupational successes and community successes is very impressive. Colin, I'm wondering, 2022 is on us. You've had huge success yourself. What have you got to tell some of our listeners, particularly if they're, let's just say a young Black Canadian? What advice have you got for them?
Yeah. Mindset matters, and how you approach the world really matters. I was rejected from Harvard when I applied there in undergrad, and I received a letter from them, and I wish I kept the letter, probably have, but I never forgot the last line on that letter, which says it matters less where you go than what you do. And I think that's a great phrase for the times we're living in, for looking forward to 2022. How you approach, your mindset to overcoming obstacles will matter a lot more than those obstacles themselves. And a lot of the greatest stories of accomplishment, achievement in the world, in history, are from individuals that didn't start out with having it all that didn't have, that weren't forecasted to succeed, that nobody was betting on, but they had a great mindset to look at obstacles and opportunities, to find the way around things. And I think that's important. And the last thing I'd say is, look, if you go back to your childhood, when you're 3, 4, 5 years old, you're told that you can accomplish anything. You can do whatever you want to do. And then as you grow older and older, you have these limitations put on you. You get put in the box. And over time, those boxes, the walls of that box come closer and closer and closer towards you. And what you should remember always to do is to have the naivety to push those boxes away, to try to rekindle some of the, yes, I actually can do that crazy thing that I thought I could do when I was 5 years old. You actually, if you look today, you have a lot more capability to do that. And so that would be my message for 2022, that you can actually have the naivety to believe that you can do those things that you thought were impossible to do.
I also went to Harvard Business School, and I had John Whitney, Professor John Whitney, for marketing. And my first marketing exam in the fall, I flunked, and I was devastated. And I thought the walls of your box were closing in, and that I was going to be an admissions failure and I'd have to come back to Toronto with my tail between my legs. And I decided that day that I was going to be a George Baker Scholar, which is the big award they give out at Harvard Business School. And I wrote it on a piece of paper, and I put it on the wall, and I read it every day. And 2 years later, I was a George Baker Scholar, and I got the award. And so pushing those walls of that box away for me, and setting that mindset and having that vision, were critically important. So, Colin, thank you so much for sharing your story of success with us, and inspiration for everyone, whatever color we might be, because you are one of the most amazing gentlemen I've had the privilege of interviewing. Thank you so much for sharing, and keep on achieving and keep on setting the example. And I look forward to your continued contribution to Toronto and Canada.
Appreciate it. Thanks for having me.
That's our show for tonight, everyone. Thanks for joining us. I'm on every Monday through Friday at 6 o'clock on 960 AM. You can stream me online at www.saga960am.ca. All my podcasts and videocasts are available on briancrombie.com, videos on Facebook, Instagram, YouTube, and podcasts on Apple, Audible, and Speakeasy. Thanks for joining us. Colin Lynch, thank you. Have a great 2022. Good night, everybody.